142. Thomas Hayes joins me this morning. What do these retail sales numbers mean for the market, you think?
Well, I think it shows a continued resilience of the economy, a continued resilience of the consumer. I think as it relates to the Fed, which is the big question for this week, it probably gives them cover to just start with 25 to get their feet wet tomorrow, 25 basis point cut versus 50.
Does it matter? 25 basis points, 50 basis points? Doesn't really matter that much, does it, if the downtrend is in place after 4 years of nothing?
I think you're exactly right. I think that's what they're going to do. The big thing, though, that very few people are paying attention to, what they're paying attention to is 65% chance of a 50 basis point cut tomorrow. That's in the Fed funds futures market. I think that's a little bit aggressive. The key thing this week is not so much what happens on Wednesday, what happens on Friday with the Bank of Japan. If you remember in early August, the Bank of Japan hiked when the Fed didn't move, and that created a liquidity mismatch, and the Nikkei fell 25%. So if the Fed goes 25 basis points, the Bank of Japan needs to hold pat and do zero. If they go 50, the Bank of Japan can hike 25, and things will be okay. But you don't want a situation where the Bank of Japan starts to unwind that carry trade again by going more aggressively than the Fed in the other direction.
It's just getting very complicated, isn't it?
Yeah,
Looking at the Bank of Japan to the Federal Reserve, 50 basis points, 25.
There are a lot of assets.
Well, I think the bottom line is that stocks go up. Typically, the S&P goes up 13% in the 6 months after a rate cut.
Okay.
So
exactly.
if you're doing well in the market, you'll continue to do well.
I've got to deal with this. Last time you were on the show, you said that Intel was worth buying. And at that time, it was what, 19, 20 bucks a share?
Yeah, everyone was hiding under the desk. And during the break, he said, Tom, what do you think? I said, absolutely buy it. It's trading at tangible book. If they liquidate the thing tomorrow, you get your money back. Oh, and by the way, there might be upside. People are talking about Intel like it's going out of business. This is a business that did $50 billion of revenue in the last 12 months, and people are worried about solvency. I'll tell you what, 3 big announcements since we saw yesterday. They're partnering with Amazon for AWS to do an AI customized chip. They got $3 billion contract from the Department of Defense, and they're moving the foundry business into a subsidiary so they can raise outside capital without diluting the shareholders.
So buy it at 21?
I like it at 21. I like it at 20. I like it at 19. And it's going to 30, 40 plus over time.
Okay. Thomas Hayes, thanks for being with us.
Thanks for having me.
Always. Coming up.